From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 26, 2017. In just a moment, we'll be taking a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. But first, a recap of a couple of the trades made over the past few days in the live trade room. We've taken a short here on the AUDUSD, the Australian US dollar. We took the short here underneath the yellow shaded area. Once it got underneath there, we saw the open and close on the 4-hour time frame, took the short underneath the 75.40 level, and obviously you can see down here at the very bottom of the chart, we are currently sitting about 58, 60 pips of profit on the trade. Of course, we're protecting the profit. We're moving our stop loss to break even or better, closing some profit already on the trade as well. So successful trade there. Next thing we're going to look for is the successful break underneath the green shaded area, 7,500, 74.95, and the continuation further for the Australian dollar. Moving on over to the GBPUSD, we've been holding this trade for a couple of days now as well. The buy from 127.80, the bottom of the orange zone. As you can see here on the 4-hour time frame, there's not a whole lot going on the pound dollar right now. It's just been bouncing around into this range or zone for quite a while now, really since last week. So we're waiting here for a trend breakout, and so that's what we're waiting on. We'll continue to protect profit. If it breaks above the resistance, we'll capture more profit. If it turns back lower, we'll get out of the trade and look for a new opportunity for the pound dollar. Moving over to the USDCAD, dollar Canadian. One important thing to make a note of here, in about 20 minutes from the recording of this video, so it could be past by the time you watch this video, we have some news out of Canada with retail sales information. We also, at 10:30 a.m. Eastern U.S. time today, have crude oil inventories, which can have some effect. If there's a massive movement on oil prices after those inventories, it can have an inverse effect on the USDCAD. We often look at that in the live trade room. Just a quick peek at our oil prices and how they have been falling for the past week and a half or so. You see this fall down on the right hand side of the chart. So make note of that fall that we've seen for the past week and a half. Then you go back over here to the USDCAD and take a look what's been happening over the past week and a half or so. It's been rising. So we often look at that in the live trade room. Something important to note, we're zoomed way out so we can see all the way back to March of 2016. We're reaching a high that we haven't seen in quite a long time. All the way back into March of 2016. To the left, you don't see anybody touching this. It's only been those last two black circles at the top of the chart the last time, couple of times we touched these resistance high. Now let's zoom in, and you can see what it's been doing for the past 2 days, touching that same pink shaded area, 135.75, 135.95, just underneath 136. So the question, of course, of the day is it going to break this pink zone and go higher, or is it going to bounce off of it and reverse? Well, I think there's a lot of factors that could affect that. Of course, like I said, retail sales news today. We have the crude oil that's been falling, and we have those inventories popping up. We have, of course, today is expected that President Trump's going to announce some tax reform information for the U.S. So a lot of things could affect this pair, the U.S. dollar and the Canadian dollar. But this is the area I think we want to watch for our trading decision. If there's any information that causes us to break out above 136 in the pink zone, I think we look for the continuation higher. Likely some stop losses are going to get challenged for anybody in a sell right now if it breaks above the pink zone. If it starts to bounce off of here, we look for resistance and clues to reversal. A bearish engulfing candle, a shooting star, something like that would tell us that this is more likely a resistance and a reversal point rather than a breaking point. So this is the area that we want to watch today. Of course, if it breaks down, we look for the yellow zone clearly to be our first target on the way back down because of the historical resistance in that area, 135. And if it goes higher, we're looking closer to the mid to upper 136s, this blue shaded area at the top of the chart, as our first resistance target. So we need to really pay attention to that pink zone. 4-hour time frame. Some interesting things happening here. We did yesterday, of course, get above the pink zone on the 4-hour, but then right back below it. I hesitated to buy it at the top of the trend. Good thing, because it turned right back below it. I think the fact that we are underneath this pink zone is a very interesting setup. We have the big blue candle, the hesitation here, the fallback underneath. So my preference, at least at this point, prior to getting any news out of this for this currency pair, is to go short because of this setup here. The push above, the pushback below, a lower high. Again, we often look at lower highs as a clue to a shift in direction, and we could be looking for it to go back down to the yellow zone. So keep an eye on the current 4-hour candle, keep an eye on the news, watch for the reversal from this point at the pink shaded area, or the breakout once again above the pink shaded area 13600 for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.